Welcome you today to our live session for everybody. This first part, obviously, as usual. Today is the 10th of December. So for some of you, it's good morning. For some, it's already good afternoon. And we're gonna jump straight into the markets for a second. But first, we're gonna do a little bit of theory, and I just take this market stuff off so it doesn't disturb our view. Basically, take this one off either as well, and have a look first at the disclaimer as usual. But what I like to look at is what I do every morning to start the trading day. Besides having breakfast, obviously, and maybe do some sports, always the same question once you open up your screen is basically, where are we at current? So if you go in New York morning and you look at the charts, the first question you have to ask yourself is always the same: where are we? Second question is, how do we get here? And then you look at it, how do you gonna go next? And the question is, why should we get there in any case? So in other words, this is the basis basically on the target trading issue. Now with that, let's look at the chart and just take it up a touch higher. And let's start with the most active one before we could look later on our current positioning at dollar yen. Now this is the dollar yen hourly chart. I'll make it a touch bigger, I think. Yep. And so we can see it from the last trading days, from the 5th of December down to the 10th. I'll make it a touch bigger. Now basically we are around this level at the moment. And so how did we get here? Obviously we had a sell coming off the market from the high at 121.85 all the way back down. How does it look in the overall picture? Well, if you look at it, we're basically on the way up in an upward trend, and now we have a correction basically in this week. That's the weekly chart, and the correction of this week basically takes off the gains of the previous week. All right, so now we know where we are and we know how we get there. We basically moved up and now it's a correction. In other words, we're still an upward trend and we just have experiencing a correction. Now the question we have to ask ourselves basically is, how big was the correction? And I just take off these lines here, and where can we get now from here? Okay, take those Fibonacci out as well. And where did it start? Now the correction started, I have to make a little touch lower again. Started basically here already on Monday and went as low as from 121.80 basically, and as low as 117.90 roughly. Okay, so we are now here at the 23.6 retracement. From the way down, so around at the 118.80 level. What we also see here is that the market is basically came off. The market moved all the way back down on Monday, and then we had the follow-up, and that was Monday still. Then this was the follow-up on Tuesday, sell-off, and a very nice reversal coming into the market. And now we find here around 118. Where is it? Roughly here. 118.72 support. Okay, so I moved down from 121.80 to 117.80 basically. That's 400 pips in 2 trading days, and on that day we had a basically reversal of close to 100 pips. The market corrected again, went to Asia up to 119.90 again, another 100 pips up. So basically 50% of the down move was already corrected overnight, and now we're basically hovering around in the lower quarter, or quadrant if you like, between the 23.6 Fibonacci level and the 50% level, 38%. And so where are we going to go from here? Now on dollar yen, we have to watch it because we have went a long way up. And I like to take the daily now and make a Fibonacci as well on the daily. So we came from 109 roughly. This candle, it's just roughly speaking all the way to there, and the retracement which we are experiencing now is the 23.6 retracement level. Okay, that is this little number up here, and potential on the downside correction is still up until the 38.2 retracement, like 117.30. So if the market wants to correct deeper, it can up until this level. That's a very important support level. And if it breaks there, then we have room to 115.75. So another 200 big figures. In other words, we have 200 pips. In other words, we have about 400 pips still potential on the downside at this current level. If this region down here, which is currently supported last night over in Asia and currently finds also support in the current New York session, so once it's broken, it might go down there. It is still a correction of the overall trend. So if we like to go long, we better wait till the market makes up his mind, and then we decide, unless we have a long entry signal, and then we can go ahead and trade from the long side. Now, last night we had a long entry signal, and as you remember, we were short dollar yen, and let's have a look how the position developed. And we also had a long entry signal last night in dollar yen. Now, let's have a look. Now, our short dollar yen is underwater with about $70 at the moment. We are long dollar yen, long signal was last night, as long as you know, we were long at 119.16. That was basically our signal which we had last night. Stop loss is around 118.73, so just below these levels here. That's our stop loss level. And basically, one would be safer if you take the stop even a touch lower, like the Asian low. We can do this now together and just move it down, tuck, like, you know. So this is now what I call a safe stop. In other words, once the market breaks this stop, then we can assume the market is going to go down a couple of hundred pips. And what I would do then, wait for the next signal of a reverse. In other words, I have to need a strategy, and obviously if I want to move down, the market stops me out and the market continues for another 400 pips, I need to have a strategy for that. All right, so that's what basically is stop reversal. In other words, what we're going to do, if you get stopped out, then we make a new trade, setting up and playing then with the market all the way back down. But now we found support and we're basically long, and the moment, as I said, we're down $60, not the world, a small position. Why did I put a small position? If you remember, we had a bigger position on the short side. Let's go into the trade history. Here we are. This is our dollar yen 120.78 we're short, and we covered it at 119.17. We got stopped out with a profit stop. So I had a trailing profit stop, and we got stopped out there, so we made 1,350, whatever. And that was a bigger position. It was a whole lot. Now currently I've just only placed 3 lots, 3 mini lots, for the very simple reason. There's still a high probability that the market could correct deeper, and that my signal, which I had, the long signal, buying signal, was a false signal. So the risk is there if you have 400 pip movements, obviously, and intraday movements of 100 to 200 pips, that you might come up to a false signal. And if it's a very volatile market, first rule is reduce your size if you want to be still in the game. If you have big size, you have big potential losses. So let's first of all get a footbed within extreme markets with a small position, see whether the signal gives us the right information, adjust for the big movements intraday on the stop loss side, and just wait. Now if the market works as expected, we always can increase the position at a later stage once the nervousness and volatility is out of the market and the market follows its trend, its original trend, and it's a long way uptrend. In other words, we have enough time to increase the position once the market comes and settles a little bit and finds a structure. All right, if the market continues to be extremely choppy and we get stepped out, we stay away from the market and just watch it till it comes down. No one is forcing us to go in the market. All right, it's just to grab opportunities. Like we had the opportunity on Monday and Tuesday, we grabbed it, made a nice return, close to 18% in 2 trading days. Great, thanks very much, relax. Okay, so that's on the dollar yen side. So we have to wait whether we're going to break out there or not. On the pro side, we're going to discuss this potential setups in more depth later on. Euro dollar, interestingly enough, last night I got a signal on last night, and last night we discussed it in the process session that he got a signal here. Where are we now? We are still hanging around range trading in euro dollar. Let's have a look on the daily. We are on a downtrend. We can see this very clearly. We're in a downtrend. We are correcting a little bit from the lows, but the market is sort of stalling out here. Make this touch bigger and another bigger. And there we can see it better. Downtrend. These are the moving averages. The market came down to new lows, is correcting, but you can see this now very nicely. The market is sort of stalling out, and now he's fighting either to break up high again and tries to take out these highs over there, or whether to resume his downtrend. In other words, we're going to end up the day with a red candle. Well, this remains to be seen. At the moment, euro dollar is trading, where is it now? 123.92. We're short at 123.90 with the stop loss at 124.15. So that's our stop above today's highs. And if it gets taken out, it just gets taken out, and we just wait and see what the market's going to do. But I would stay away then from the market till it calms down and settles, and we see more clear picture where we'd like to go. Because the trend is down, but the market is mega short, as you remember yesterday on the COT report. So based on the structure, we could even experience, if you go now on the weekly chart, a correction higher, maybe even as high as 125.80. Okay. So, wow, that's this on euro dollar, and let's have a look. And very interesting for tonight, and then I'm gonna switch over into the pro section in a second, because we have some setups I'd like to discuss there in more depth. Tonight we have the RBNZ, the National Bank of New Zealand, coming up with potential interest rate changes or not. Currently we're at 3.5%. The RBNZ is not happy with the New Zealand dollar, or called the Kiwi, so we can expect that there will be some verbal intervention again. Mr. Wheeler, who's the governor of the central bank there, is doing this on a regular basis. At the same time, we are basically downward trend and found a strong basis here. Now let's have a look at the weekly here on the chart. We see we came all the way this year down from 88.13, and now we found a bottom here and already broke this bottom line. Okay, we broke it, and the market is trying to retrace it back. Okay, coming up from 76.30 is now hovering around 77.24. Now, interestingly enough, if there would be a surprise, for example, that Mr. Wheeler decides to cut the interest rates and just being it by 25 basis points to 3.25%, then he would achieve immediately his target, combined with a potentially strong dollar over the longer horizon. Then the New Zealand dollar would just collapse, and we would be very quickly all the way back down here at the lows. Small stop on the low side, and then we might have the breakdown lower into new uncharted territory, basically. Make this picture a little smaller, so we see where we're going to go. Then we're going to head, basically, if we break this one, we're going to go ahead all the way down to 75, 74, 80. Well, thanks for listening. If you have any more questions, please join me in the room. And for all you guys who like to go pro, I just posted on the link. And for the pros, we're gonna see us in a moment and discuss market conditions, whether we're gonna plan new setups or how we're gonna manage the current setups. Take care. Bye.